debt is pulling consumption forward from the future. You borrow money that you don't have to consume something today. So, and that's in and of itself inflationary, but the debt remains and you have to pay it back. And so you've got to make more money to pay the debt back. And so if there's not a continual flow of new money into the system, the debt starts to default. And so these are what we call classical credit cycles. And there have been many, many credit cycles. I mean, this story is as old as man. I mean, these things were happening in biblical times. You know, people would, and this is why the whole concept of the debt jubilee occurs, because people just get so indebted they can't pay it back anymore, and the debt collapses. And so, you know, this is what happened in the 20s and 30s. We had a big bubble and a debt collapse, and here we are 100 years later, and sure enough, we're going through the exact same cycle. And in the 20s and 30s, what they did was they confiscated the gold and they reset the gold price, so they created some inflation, and then they built off of that base, and they had a sound money base because they were on a gold standard. We don't have that today. This has happened in many countries throughout the world. I mean, people who live in South America or Argentina are very familiar with this. They've had many debt crises, and more recently, Venezuela had a debt crisis. And you know, it's what it really stems from is politicians thinking that there's a free lunch and spending more than they collect in taxes or more than the economy can handle, and they borrow to do that. And then in order to make the borrowing not go bad, they print money to pay the interest on the debt. And so if you kind of consider the world is the world, and there are a bunch of people in it, and there are a bunch of factories, and there's what we call goods and services. And you know, the amount of goods and services in the world grows every year based on either population growth or increased productivity, but it doesn't grow massively. And so, you know, the dollars or the paper currencies that we work with are a claim on those goods and services. And so if you start issuing more dollars into the system on a regular basis, each dollar buys less. It's just classic monetary debasement. And what happens is eventually in a credit-based system, the structure of the credit gets so large that it's just obvious that either the printing has to become incredibly large in order to keep the system going, and therefore the dollar value, each dollar becomes worth a lot less because there are more of them in circulation. Or the debt has to be, you know, the debtors say, well, pay me back, in which case everybody has to cut back on their spending in order to pay the debtors back, and you have a debt collapse. So you get either massive deflation, which is what we had in the 20s, or you get massive inflation, which is what Venezuela and Weimar Germany and countries that spend too much have. And honestly, you know, our situation could go slightly either way, but I think we're going to trend towards the inflationary side, because I think the government and the Federal Reserve have more or less said we are not going to let this economy fail. You know, if things start to turn down, we're going to, you know, we've got enough money, and the prevailing belief in government and many economic circles, particularly with these new MMT people, is that we can print the money. Don't worry about the money, we can print more. And they're right, they can print the money, they can give everybody the money to service the debts. I mean, look at what they did, you know, in March of 2020. They sent checks to people, they put money in companies, I mean, healthy companies, they gave money and said, as long as you don't fire anybody, you can keep this. I mean, I know several companies didn't need the money, but they took it because it was given, and it was just a government grant. And so, you know, they can create the money to keep things going. That's the good news from keeping things going standpoint. The problem is that when you grow the money supply 40% in 18 months, which is what happened, you know, you've got now 40% more dollars chasing the same amount of goods and services. And guess what? The price of those goods and services is going to go up because there's more dollars chasing them. It's just a supply and demand issue. So, and this is why you see, and people react to it too. I mean, you know, this is why we see housing prices up 20% year on year. I mean, one could make a strong argument that that's an intelligent thing for people to do. I mean, you need a house, you know, house has a certain cost. You don't want the house, I mean, you know the house is going to go up in value over time, and you can borrow against it at a subsidized government rate. So here you are, you get to buy an asset that's going to have value for 20 or 30 years, and you get to borrow money at 3% to do it. And that asset's increasing in value. Last year, year on year, a lot of house prices went up 20%. That's a really good deal. And so that's classic inflation. Now you ask, why does it have to end? Because the math just becomes too extreme. Because, you know, I mean, because it's just so far out of whack. I mean, part of what keeps these things going is interest rates are falling. But, you know, as many people know, we had negative interest rates in Europe, and we had very, very low interest rates here. We had zero interest rate policy for many, many years. So interest rates can't really go negative. So, you know, interest rates have fallen about as much as they can. The debt level has gotten about as large as it can get. You know, the economy is kind of chugging along, but it's not like it's growing fantastically to pay down the debt. And absent some huge, you know, productivity miracle, like suddenly somebody invents cold fusion and, you know, we don't need oil anymore or something, which is unlikely. You know, there's really no way out but to either, you know, you either let the debt collapse, which is possible, or you print the money to service the debt, which is fine, but that's why gasoline will be $5 soon, because you printed the money to service it. That's why oil is making record highs in the mid-90s right now. And so it's just math. It's not, there's nothing really magic about this. And these cycles, if you study history, these cycles have occurred over and over and over again. And the reason most people aren't familiar with this, they don't understand it, is that most people don't study the history of the 1920s and 30s. I mean, there's nobody alive today who lived through the last one of these, because the last one of these happened in 1920 and 1930. And, you know, the people who were alive then and were investing then, they've all passed away. And so, you know, human beings, we go on, we repeat the same mistake, and here we are.